Hello nieces, hello nephews, it's your Uncle Charters here, and today the S&P 500 continues its downtrend move. Alright, very bearish, extremely bearish, took out some very critical support levels. We are now in a bear market. Is this bear market yet? Did we drop more than 20% yet? I think we did, guys, and we're going to talk about it. We talk about it all the time, the S&P 500, the QQQ, all that. We do unbiased technical analysis. If that sounds good to you, please hit that like button, hit the subscribe button, turn on the notification bell, and be a part of Uncle Charters' family, all right? So let's continue with our analysis. This is the flow sentiment, bearish, as you can see. I have a filter for 500K premiums or above, as usual. You can see it's very bearish, but what does stick out to me are these last contracts of the day here. Premium 8.3 million, 8 million, 8.9 million, all sweeps. Entered around that 374.9ish to 375 zone. All 358 strike price, and once again that July 15th date. Okay, these are some very aggressive put orders that came in at the very end of the day. Okay, guys, now do what you want with that information. I share my options flow account with my Discord members, so you know, just something you guys want to think about. It does cost like $100 a month for this service. I love it. I love options flow. Definitely helps with my trading. But yeah, up to you guys. We're gonna move on to my Discord, where I write all my plans and strategy for the day, and I always write a bear case scenario and a bear case and a bull case scenario, because we always want to be open to any price action that may occur for the day. We want to be open to the upside, downside, because we're day traders. But here the bear case was definitely in play today, and I wrote SPY is at 381.2 as of writing this. This makes first support at 380 to 381 zone based on the 38.2 retracement level from the March 2020 low to the January 2022 high. And also, it was a previous low in the past. If that fails, I will look for puts with 378.5, 375.5, and 372 as targets. So the plan was look for puts on the breakdown of 380. Okay? We'll go to the 15-minute chart. And as you can see here, I usually sit out the first 20 minutes. But after about 20 minutes, after market open, you can see here on the first candle, it did lose that 380, my 38.2 retracement level. It's exactly around 380.4, and you see that we lost that level, back tested as of resistance on the next candle. Okay, I give it a zone because the levels aren't always exact, so I like to give it a zone. And as you can see, it back tested my resistance zone. All right, after losing it, back test and go. All right, keep that back test and go strategy in mind. I entered calls there. I had a member that wanted me to do a replay. I'm not sure why they want me to do a replay. We could do the speed up a little bit. Okay, so we play it. I'm doing this for the members that asked me right there. Okay, we lost the candle. This run, we lost it. We closed below it. This one right here, we lost it. Okay, it's too fast. This is why I don't like the replay one. But anyways, like I said, I usually sit out the first 20 minutes, and after 20 minutes, I look for, you know, entry. And right here, it back tested my 380 to 381 zone as a resistant. We want to enter puts from resistant, right? That's why I entered puts, and it worked out very well for the rest of the day. I'm just gonna take this out. I'm sorry, I know a member asked me to do this. I'm just not a fan of it. You guys can just see it, all right? I entered a put there. How did I enter the put? What made me want to enter a put? Well, it was the plan. The plan is always to look for puts when a support fails. That's why I entered puts there, okay? And how did I enter? Well, I entered on the back test as a resistant. Is it guaranteed 100% that it would have continued dropping? I don't know. I don't know if SPY would have continued going up or continued dropping when I'm trading in real time. What I focus on is my strategy, the back test and go strategy. For example, in this case, am I entering at one of my levels? Is it a resistance? If I'm looking for puts, is it a resistance? These are things that I ask myself. Yes and yes. Did it align with my strategy that I recommend to my own Discord members? Yes, because I would never recommend my Discord members to do anything that I wouldn't do myself. So boom, entered there and it worked out level to level. Okay, I took most of my profits around 378.5, left a nice runner all the way down to 374, took profits. Well, 375, excuse me. I had a level around 375.5. As I wrote in the Discord, that was one of my targets, took profit, level to level. Okay, and that's where it got a bounce, and bulls had their own chance to make some money here for a nice play to the upside. But ultimately, as you can see, it just back tested a critical resistance level. My 38.2 retracement level around 380, 381 zone. Back tested here. You can see that long wick. That's the stuff that bears want to see. If you're a bear, you want to see these long type of wicks from resistant level. That's usually a sign of more downside. Now, I wrote to my Discord member, I think this was around 12:39 p.m. I said I will look for puts again if 378.5 fails. Okay, I'm giving away the answers to the test here, and I'm also giving away what I plan to do. So I did enter a call after it back tested. I figured, okay, we back tested it as resistant. We got a nice strong rejection. So price action is bearish. So if it can take out the next support, I will enter puts. Took out the next support. Boom. Entered puts. All right. 378.5 was the level. I entered around 378.2-ish. You know, my entries are never perfect, but I try. And it did drop down as low as 376.9 is. Now, here's the thing. My next target was around 376 to 375.5 zone. It never went. So I did not take profit and end up getting stopped out. I was mad at myself. I wasn't too mad at myself because I made good money with this play. And even when I got stopped out here, it wasn't a bad loss. It did not offset the profits from this trade. But I was mad at myself because when it did drop that low, I was up a good amount. But then it didn't hit my level, so I didn't take profit. So I was mad at myself because I missed out on money. But, you know, that's how trading in real time is. It's imperfect. You know, I respect my stop loss. And then, you know, it never recaptured a critical level, which was the 380, 381 zone. So I told my group to stay bearish as long as that level does not get recaptured. As long as we're below, stay bearish. When I say stay bearish, that means look for put opportunities, look for selling opportunities. And once again, it broke down that 378.5-ish level. Okay, I entered on the breakdown again. And as you can see, it was a tough trade for me because I started making money. It was down to the 377 and then it went back up. I'm thinking, oh man, it's going to happen to me again. Instead, it did get a little above that 378.5 level, but look at the 15-minute candle. Look at it. We got some wicks above it. That's market noise because it never closed above my resistance level. Therefore, it never, you know, my trade was not invalidated. So I had to hold through some pain, but I held it, you know, trying to stay true to the price action. It's not always easy, but it worked out very well and it dropped all the way down. And I alerted to my group, the setup is there. We're going to go back and test 375.5. That failed. Okay, and I had a price target after below that around 373.7, then 372. Below that, I updated in throughout the day. And well, it went as low as 373.3. Okay, guys? So, you know, if you guys been watching my videos long enough, you guys see that the trade alerts, the trade ideas, the plans, the style, I have a pretty good track record, okay? But, you know, it's up to you guys if you find that, find value in that, okay? But anyways, we're going to move to the daily chart, okay? That was recap of the day where I explained my trades and I teach a little bit about why I take the trades and, you know, my thought process. But the daily chart is here. As you can see, I have my fib levels, like I spoke about earlier, from the March 2020 low all the way up to the January high. Now let's zoom in a bit and see what's going on. So, like I said, the 38.2 retracement level was around 380.7-ish in the 380 to 381 zone. And you can see on this candle, we gapped below it, rejected it as a resistant, and just pushed right down. Okay, I don't know how else to explain it. It's straightforward. It pushed right down from resistance. Beautiful. Now we have a massive gap from 382 all the way up to 389.75. Massive gap. Will we get the gap fill? That remains to be seen. We got to look at a few levels though. Obviously, we got to pay attention closely to that 380, 381 zone. 38.2 retracement level. I just cannot get myself to be bullish unless that level is recaptured. You got the bull flag. SPY gap below the bull flag. All right, the bull flag was around 383 level. We got below that. I cannot be bullish unless that level is recaptured. You guys starting to understand what's going on here? If we can clear those levels, then I'll favor a gap fill up to 389.7-ish. Okay. Also, you see this falling wedge. Falling wedge, the pink lines. All right, many touches. I think that January 24th to February 24th, connect to May 12th, May 20th, and today we got another touch. This is what my 375.5 level was based on this trend right here. So if anybody's wondering, especially in the Discord, where did Uncle Charles get that level from? This is where I got it from, 375.5. We did get a wash below it, all the way as low as 373.3, as I said. And technically speaking, if we just zoom in a little bit, you can see, I'm going to change the color to green. All right. You can see that SPY did actually close below it. All right. So that technically, that's a weak breakdown, but that's technically is a breakdown of this falling wedge. Okay. So SPY would need to get back above 375.5 to recapture this falling wedge and possibly put that 380, 381 zone back in play. I do have some levels at 378.5, like I mentioned earlier. Definitely pay attention to that level. All right. But the first thing that bulls need to do is get back within this falling wedge and get above 375.5. If we are below that level, I'm favoring more downside. I have 372. I have 368, 364. And if you're wondering where these levels come from, they're just previous resistance and support levels. Okay? Very critical ones from the past, and that's how I'm using them. Okay? They were previous supply and demand zones. All right? So, bulls, the first thing you need to do is recapture that 375.5 level. That will put 378.5 and 380 to 381 zone in play. If that level is recaptured, I would feel a little bit more comfortable being a bull, a short-term bull that is, and favor a gap fill. All right, unless that happens, I just cannot be bullish. Now, we have a strong bear trend. As you all know, this is very important that you guys remember this. In bear markets, bear trends, whatever, the relief rallies are very violent. Okay, they will pop up, they will turn this around you and rug pull you, however you want to describe it. Market makers don't care about our feelings. Okay, you guys know this. And you know that the short squeeze will come. It will not drop down forever. It can continue, right? But once it finally decides to take a pause, we can get a relief rally and it could be a short squeeze. You look at all the other bear markets we had in the past. The bear market rallies were violent. Look at the bear market rally we had back in May. We didn't know it was a bear market rally at the time. But looking back in hindsight, we can see it. You can look back in here. Bear market rally, bear market rally. They are violent. There are squeezes. Okay? So most likely, based on our previous experiences, and you guys probably been trading for years like me. So you guys know, based on our previous experience, that when this down move decides to pause, that bear market rally will be violent. Okay? Doesn't mean it's time to be bullish and the downtrend's over. That's not what it means. It doesn't mean the bottom is in. You can, scalp some, some plays to the upside if that happens, of course, and do some counter trend moves. You can make money both ways. But what I'm trying to say to you is, be careful for that bear market rally because it will be violent. And we do have FOMC this Wednesday. It's possible that FOMC can be the catalyst that we need for SPY to pause this onslaught from the bears and give us a violent bear market rally. You guys understand what I'm saying to you? play it level. Either way, we play it level to level. We'll let the price action guide us. You guys got my levels, my support levels, my resistance levels. If you didn't, please turn the video back a little bit. Watch it. Write down the levels. Go look for calls when a resistance is cleared. You can use the back test and go strategy, or you can just buy the breakout. Either way, you got to be willing to take the risk. The back test and go strategy is less risk, obviously. Okay? When the support fails, you look for puts. Because the support fails, that's bearish. Okay, guys? That's my strategy every single day. It's very straightforward. It's quite simple. Take years to master, of course. But as long as, follow that price action, it will come to you. So I'm moving on to the VIX here. Very bullish price action on the VIX. What can I say? It gapped out of this trend line, this white trend line, okay? Finding some resistance around here. This was a previous high around back in early May. So around this 35 zone, definitely a resistance zone. But if we can clear that, 36.6, 39, then 42 are the next resistance levels. Support levels at 32.3. We want to make sure that holds. If you are bullish on the VIX or you're bearish on the SPY, you want to see that 32.3 support level holds. If that fails, go back. We could go back down to 29.7 to 30 support level. It's a zone. And if that fails below 29.6, that's a false breakout. Okay. False breakouts are very bearish. So just something to watch out for. Watch out for the false breakout. All right. RSI is pretty oversold. So I wouldn't be surprised if we get some sideways actions or maybe even a pullback. But very important to watch that 29.6 level. If it breaks below, if it fails, that is a false breakout. Okay, something to keep in mind. Move on to triple Q. Triple Q here. Let me see. Well, we got the gap fill. I had a gap fill right here. Around here. Big gap fill. That was around 276.7-ish, 4-ish actually. All right, 276.6-ish. Triple Q definitely came and filled that gap. Closed below it actually, which means I have my next support level around 273. As a matter of fact, around 275-ish actually. That was the previous resistance here. Below that would possibly be around 273. And then I have more levels around 270, 266.8-ish. Then 261.3, okay? As you guys can see here, previous resistance and support levels that I'm using again, okay? That's how I use it. That's how my levels are so good. You might not think my levels are that good. I think my levels are great. Moving on to Dow Jones. Still bearish, all right? I got next support around 303.5-ish. Then all the way down to 298.7. Interesting level down there. That served as a double bottom back last year. Okay, definitely a critical level. If that fails, we got the 38.2 retracement level at 298.2, which is pretty close to that 298.7 level. Okay, if that 38.2 retracement level failed, that's extremely bearish. All right, for me to be bullish, Dow Jones needs to recapture 306.2. That will put 308.6 resistance in play. And if that can clear, we can possibly go for the gap fill. Gap fill is around 314-ish. We'll see. All right, if that can fill. But first thing we got to do is clear that 308.6 level. Okay, IWM, nice strong rejection here. Even though it gapped below the 174.3 is resistance level, it went back tested as a resistant. It did not fill the gap, but it did respect our resistance level before pushing down. I have the next support at 169, and if that fails, 165.2 is in play. Can't get bullish, or at least I wouldn't get bullish unless we recapture 174.3, which would trigger a move back up to 179 or higher. Okay, Apple lost a very critical level today. I have a critical level around 132.9-ish. Lost that level. I can't get bullish unless that level is recaptured. Okay, if that level is recaptured, that's a false breakdown. Very bullish, trade setup. It's okay. So above 133, I'll favor more upside, at least up to 137 for the gap fill. If not, and we continue below, we could continue head down low. I got next support around 126. That is a nice drop to the downside. Speaking of nice drops to the downside, well, this is Tesla. Now, I have a previous support level back in August of 2021. All right, that's around 648 level. Today, Tesla tested that level, went below it actually, and closed around 647.2. So technically speaking, Tesla did close below that level. That is bearish. All right, I had a critical resistance around 680. That was based on a previous low back on May 12th. And you can see here that Tesla went and back tested that level. It actually went up to 679.9, 10 cents off. Not too bad, but you know, strong rejection. Okay, I cannot get bullish on this unless it's above 680. All right, above 680, I'll be bullish. Until then, I'll be bearish. That 648 level is, you know, it's looking pretty weak. That is a decent big body candle. Okay, right at a support level. So don't think in terms of volume. Think in terms of buying pressure as opposed to selling pressure. Okay, because you can still have more buying pressure than selling pressure on low volume as well. Okay, and vice versa. So when I see a big body candle like that, that tells me selling pressure is great and buying pressure is very weak. The fact that we got buying pressure so weak at a critical support level tells me that it's most likely going to break through. Okay, that's a little tip that I could give you when, you know, trading these support resistance levels. But always got to be nimble, because if Tesla gets back above 648, okay, I have some resistance here around 669.5. It's based on a previous high. But if we can clear that, we may get a back test at 680. I will only, like I said, I'll only turn bullish if we recapture that level. Okay, below 648, I have my next support all the way down to 621, and below that, we'll most likely dropping back to the 500s. All right, guys. So that's what I have for you guys today. Thank you guys so much for watching. This means a lot. You guys are seriously helping Uncle Charlie's dream come true. You know, so please hit that like button, hit the subscribe button, join the family, join the community, and thank you guys. Peace.